welcome to this OmniTalk series. So today we are going to talk about the recent sell-off seen in the PSU stocks. So Vikas, we have seen like last few days, especially last Friday and Monday, there was a
Right.
big sell-off, and some stocks had lower circuit also, and significant, I would say, with significant price movement we has been seen.
Absolutely.
There's a lot of questions that are there, in investors' mind, like uh, should they hold? Is there a problem with PSU stocks? Is there a meltdown happening in PSU stocks? Or what is the reason behind
Mhm.
this sell-off? So all these points I think we wanted to discuss, and just our view on how to go about and evaluate or analyze these situations is something that we wanted to cover today. So let's start with how do we see this recent sell-off?
Yeah. So people, when such things happen, people either take two kinds of viewpoints. Some people want to sell off in a panic,
Yeah,
that they also want to get rid of it because someone knows something
something, and
and they
he
are
is
doing
selling.
it,
Yeah,
and so let me do it. And so that is driven by fear. And then the other part, which is greed, right?
yeah.
That,
So
oh, is it time to buy the
but
dip?
right,
Oh, I got a dip. Should I buy it?
right.
And either way is not the correct way, right?
Hmm.
The scientific investor tries to move away from that or step back and have a more fundamental based view. So the fundamental based view is that on Thursday, was there any information which would have forced you to sell?
So,
Or on Friday, did it become available?
hmm.
To our knowledge, there's nothing like that,
Correct.
right? There's no new information which came in on Thursday,
Hmm.
Friday,
Hmm.
or
Right.
in between, or even on Monday.
Correct.
But what we did see is that there are big sell offs of 5%, 10%, or even 20%.
Right.
Things were hitting circuits.
Right.
And this was on huge volumes, right?
Right.
And this continued on Monday
Monday.
after Friday
Right.
on huge volumes. Sometimes the volume being a very large percentage of the outstanding free float market cap,
Absolutely.
right?
Absolutely. Like as high as like 20% or
Of the free
15%
float.
of the free float.
Yeah.
Yeah.
By
Very.
by what? First 3 hours of trading
Yes.
or something
Right.
like that.
Right.
So which is extraordinarily high
Right.
volumes. So if without any fundamental information such thing
Right.
is happening.
And see, the other challenge is they were from various industries. Like if
Hmm.
there is a fundamental flow, is it related to particular power
Company.
sector, financial services sector,
Hmm.
defense sector,
Hmm.
railways or
Right.
infrastructure or anything? There was no information that came. So one
Right.
commonality definitely was that all were public sector enterprise, right?
Yes.
So
That's
so
all.
now is there a change which is driven from the promoter, right?
Correct.
Is there a policy decision that has come
Yes.
which is going to
Yes.
impact? That is also has not come
No.
definitely clearly till Friday. So
Yeah. There's
yeah.
no information
Hmm.
about the change of management, so
Management,
to say,
right,
either.
right,
So that information is missing. Then it's across defense, railways, power, etc. Right?
right.
But on the other hand, the PSU banks are not
Yes,
in that category,
exactly,
at least on Friday,
right.
right? So somehow the banks are exempt from whatever is the
This,
problem, but
hmm,
it's common to railways, defense, power,
right,
etc.,
right,
which even housing finance,
hmm,
right? Which is strange,
right,
which doesn't make sense. Second, so it's across industries, so it is indiscriminate. Now within a sector as well,
hmm.
like if I look at, let's say, defense, then you could say that one reason why someone sells off something is, oh, it's overvalued, right?
Yeah. So the other common
Hmm.
thing we can say is
Hmm.
that many or most of these names have gone up significantly in the recent,
Sure,
past, right?
sure.
So as you're hinting at that, then because they have went up,
Hmm.
they would have become overvalued.
Could have,
Could have,
yes,
right?
yes,
So that's the other metric
correct,
that one
correct,
can look at,
correct.
right?
Yeah, so something having gone up,
Gone
that's
up.
not sufficient reason,
Yeah, yeah.
right? People normally conclude that something has gone up by 50%, so it must be
It must be
overvalued.
overvalued.
That need
Right,
not be true.
right,
That depends on extent of undervaluation.
right.
So even by going up 5x, you could still be undervalued,
No,
right? Even 10x, you could still be undervalued.
correct.
So the more fundamental thing is what is overvalued. And yes, you could be selling those and
Right.
it would be justified and it would be fine.
Right.
But here we see that there are, like, let's say defense and railways are relatively more overvalued as a pack compared to power.
Right.
But power is also falling as much as defense and railways. Then within defense itself, you would have some stocks which are overvalued,
And
but some others which are still undervalued.
Right.
But both of them or both categories are falling
falling.
at the same kind of extent.
So another hint at indiscriminate selling, basically.
It's basically indiscriminate selling is our inference from all
Right.
this information,
Right.
data, and that means it's nothing to do with the fundamental long-term investor. This
Right.
is more of a somebody's trading activity,
Right.
and trading is a zero-sum game. So somebody is making money out of the other guy,
Right.
but it doesn't impact the long-term investor at all, except for giving the long-term investor an opportunity to now look at things again and see if there is again a mispricing which has emerged,
Right.
and reallocate the portfolio accordingly.
Exactly.
Right?
I think that's the kind of that's the way to go about to kind of find an answer to the question that okay, now is it a good time to buy, or you should buy the dip, or are you going to, is it about catching the falling knife?
Right.
So obviously the easiest thing for value investor or fundamental driven investor is to look at the valuations, right? And there is, even in the PSU pack itself, there is no single answer that okay, that you can just buy or sell inside a particular sector, inside the when you're looking at a set of companies. Each company has, you have to do one single bottom up analysis and try to understand that how, what kind of discount to intrinsic value you are getting at this level, right? And that's how you determine that is it time to buy, is it time to trim, is it time to sell it completely, and so on. So uh, that's the approach to really get that answer. uh, Also, I think in terms of the nature of most of these companies, I think they are pretty long term in terms of their projects, their execution timelines are pretty long. Whether you're talking about a power company, which is typically into generation, or similar kind of infrastructure model, or you're talking about a defense and or railways and so on. So the typical approach of Mr. Market to kind of look at quarter on quarter earnings, and other is the top line growing, is the other earnings growing, is the order book expanding at a rate at which the market now expects it to expand. And if you don't see that, there is like and you believe that okay, it has run up significantly, and as per the last 10 years of average PE multiple or some multiple, it is trading at a premium, and that premiums looks like now 50% or 70%, while it was so undervalued that even a 70% premium to 10-year average PE is something nothing to worry about. And then you start guessing that okay, this quarter the numbers have not come as per my expectation, and maybe I was wrong in my hypothesis, or maybe that's it is time to exit and then relook at it, or have a very strong look at the fundamentals. I think those approaches are also to be kind of differently molded when you are looking at these sectors, right?
Absolutely.
Right.
Absolutely.
So that's another thing. It's not very closely linked to the recent sell-off, because that's more of a trading activity. But as a long-term investors who have taken exposure to these sectors, this is something you have to keep in mind, like while looking at even the fundamental numbers pertaining to these companies.
Right. I mean, people start interpreting fundamental inferences based on the price action.
Right. Right.
And so many people are giving all kinds of now fundamental so-called reasoning for why things were falling, because the price has fallen. So that's absolutely the wrong thing. Same way on the other side also, when prices risen, people start attributing strong fundamentals. It doesn't make sense at all.
Correct.
The fundamentals come first. This is the effect.
Right.
Like you rightly pointed, for most of these infra or projects companies, quarterly is definitely the wrong thing. Probably a 3 to 5 year kind of a moving annual report would be the correct annual report to look at, right? Sure. Moving average annual report. Like every quarter you update the last
60 or whatever.
last 60 months, Yeah,
right.
I mean,
And then look at the
and then you look at the data.
right.
That's too complicated,
Okay.
but
Yeah.
that's how it should be. So look at
Hmm.
the fundamentals, look at the
Correct.
order book,
Hmm.
and do a valuation
Correct.
over the next 3 to 5 years
Right.
basis.
Right.
Yeah.
And while we are talking about this volatility, I think it's important to understand the nature of equity markets as well, because a lot of uh, there might be a lot of new entrants, who have come to equity markets in the last, let's say, 3 years, 3 to 4 years, and broadly they have seen only kind of a upward movement in some of the stocks,
True.
and they start believing that okay, this is the only one way traffic and one way
Right.
that how the price action moves. uh, so it's not that this is a fundamental driven or any logical, like broadly say that because you've been saying that this is kind of an indiscriminate selling, but these things will happen and will continue to happen in future also. So that's reminds us like there's a long term horizon that you need to have. You need a lot of patience, right? And you need to be true with your fundamental analysis and what you are looking, why the reason why you particularly bought a particular set of stocks or a single stock, that has to be revisited continuously. And then you need to diversify and have various such growth vectors or core portfolios in your allocation, so that you can kind of tide through such volatile days, and you don't run away from the equity markets altogether, that oh, I lost 10% in one single day and it's unbearable. Right?
Correct.
And and then have all these toolkits be with ready with you to look at the intrinsic value calculations, and
Correct.
what is the kind of discount that you are getting, and is it is it the time to sell or is time to buy more, is all something that you become very comfortable with.
Correct.
Great. So thank you for joining
Thank you.
us. So always keep in mind that investment in securities market are subject to market risks. Read all the related documents carefully before investing. And also that registration granted by SEBI, membership of BASL, and certification from NISM in no way guarantee performance of the intermediary or provide any assurance of returns to investors.